Hey everyone, I do apologize for our live Stonkamania session. I had to leave early, so I want to do over a quick recap of some names that we traded and also go over the burrito because we short the burrito Friday, covered our puts today for nice profit. So this one really stuck out, and these calls are already up about 33% in VFC. So VFC, we saw the September 15.5 call. So in the money calls, big order, and a small, $15.5 retailer stock. Chart daily, 2-day, monthly, all buy, waiting on the weekly. But if we go intraday, and this is why I took the signal, I'm using platform X here. And this is what we went over. Make sure if there's a link or call in, maybe I'll post a link if I do it on Telegram, where you can purchase. So those calls hit in VFC. Now I include an interactive watch list, a day trade, swing trade scan. I obviously like using the news flow and the penny option scanner to help me pick the options. So at 3 p.m., so that's right in here, we had, there you go, you see stock, we had an up arrow, price above the wave, blue wave, and we had a multi-time frame analysis, 5-minute, 10-minute, 15, 30-minute buy signal. So all we did was came in, bought the calls in VFC. You can see right there, we paid, I think, 46 cents. They closed at 63 cents. It started to scale some out, but you can see up $700 in the day. Now, obviously, this does not happen every day. You don't get a 33% move every time, but it goes to show you just how powerful a small rally in the stock can lead to big gains in the options. I'll show you another one that unfortunately I was driving that I missed, but these exploded. And this is ABBV, up arrow, you had a 5-minute buy, but those orders, these weekly 210 calls that hit the scanner, Christian called these out in the option pit. Look at these. Look how much these calls move. Now, these were weekly, so short term. These, obviously, you want to get in and out of short term. They bought the calls right here around $1.30. They closed over $2. That's insane. It's 50% intraday moves. And there were some other ones I took from the penny option scanner, AD&T. These calls, let's take a look at these, AD&T. You can see. The stock, they bought the Sept10 call. So again, short dated ADTN. Did I type this in right? ADTN. There we go. Oof. All right, so we had 5-minute, 10-minute, 15-minute, 30-minute, all buy signals, meaning every multi-time frame is confirmed intraday. And look, they bought the calls. Look what happened to the stock. I actually bought shares of stock too on Robinhood. And look at this, they exploded. The stock exploded to the upside, pull it out, and it took me, y'all were there live with me today, maybe what, 3 seconds or so, AD&T. I typed in the ticker. Boom, I pulled it up on the multi-time frame analysis from a swing trade point of view. So it's the daily, the 2-day, that's the king of momentum, the weekly and the monthly, all lined up buy. Boom, these calls had a nice pop too. So you can do the stock or you can do the call options. Now, one thing, and I was really disappointed to hear y'all say this, because if you're in the option pit, of course, we short the burrito on Friday because we saw some nice puts on the penny option scanner, and we closed those for around 65% today. We had the 41 strike puts, stock had a big gap down about 3.5%. But here's what's key. And again, I'm just trying to teach y'all trading from a professional, the right way, not reactive. If you're trend following, you're reactive. We're trying to be proactive. So puts are up 65%. What are you gonna do? Of course, you're going to take profits. Why would you short in the hole? Never short in the hole. That's basically if stock gaps down, whether it be news, whether it's just gapping down, and then you short it. What usually happens when you short in the hole? This happens, where you have a short covering rally. Doesn't matter what the stock is, best stock, worst stock in the world. Short covering rallies, never ever short in the hole, because what happens if this stock gaps up, let's say 3-4% tomorrow, the puts you bought are down 80-90%, but the calls taking the other side of the trade are going to be the best winner. So that's what I did today. Actually bought some calls in CMG, and they were already up I think like 6 or 7%. I got to look at it. How much were they up? 6% already. Just to show y'all, never short in the hole. I will repeat, if you short in the hole, remember Etsy. This is an analogy I use. We bought Etsy puts, what, 5 times last week? It worked like a charm. Well, eventually, could be best stock, worst stock, doesn't matter. Eventually, you get a day like today where it's up 7%. What happens to those puts? The puts, poof, because you short in the hole. Never, ever, ever short the hole. Wait till you get a dead cat bounce, then re-short if you want to short. So like, let's say you're bearish on Etsy, you know, let's say they buy some puts in Etsy and the stock's up 7.5%, then you would take that big pop to buy puts. Why? Because the puts are cheaper. When you shorten the whole, what happens to volatility, and I'll pull this up on a blank chart so you can understand, when you short in the whole, you're buying high implied vol, and then as the stock goes up, what happens to volatility? It just goes poof, it's gone. So you're wrong on direction and you're wrong on vol. So let's look here. So you're buying, look how high volatility is. You see that? Record high. Why? When stocks go down, vol goes up. So then when you try to short buy puts on the dead, literally dead low of the day, because the stock's already down 3.5%, what happens as the stock goes up? Vol gets crushed. So you're wrong on direction and you're wrong on vol. Never, ever, ever buy puts in the hole. Let's take we can go over example over example. Again, use Platform X in your trading. It's a simple gauge where you can find, like y'all were also talking about T-Mobile today. Look at that piggy. It's down almost 10 bucks now. 10 bucks. And is that really right? 10 bucks now, T-Mobile? So again, you would use that. That was an H cell pattern, right? So a lowercase h, right? So lowercase h cell pattern. Basically, a stock gaps down. You have donkeys who try to dip by it, and then what happens? See how it's a lowercase h? Poof, flush. So that is what I mean. When you shorten the hole, so like let's say you buy Etsy puts here, then you did get a dead cat bounce. That's the worst thing. So what you want to do is you want to wait to reshort on that pop. And with Platform X, sell, sell, sell. Boom, you know what to do. So hope the video helps. Again, we'll be back normal schedule starting tomorrow. I'll post a link here on Telegram if you want Platform X for day trading, swing trading, everything. But again, just try to use the market. Don't try to overthink it. Try to toss the opinions out the window. Look where supply and demand is. Use your multi-time frame confirmation, your variable moving average, and price acceleration. Be proactive, not reactive. That's the number one thing I see with new traders is the move happens because they're trend following. The trend doesn't happen until the move starts and then they react. We're trying to be proactive. You get those CMG puts, boom, the stock's down 3%. You take profits 50, 65%, you move on. Wait till it pops, then reshort that pig. That's how we do it. Look for quick moves on stocks no one else is interested in. Look for squeeze plays to the upside while the index is asleep. That's the best way to make money in this market. Make sure you like, subscribe, leave a comment too if I post this on YouTube.